this is John Piper with the weekend video clip, and it's Saturday the 25th of March. I'll start with the Dow this morning. I said last week that Monday could be critical. In the event, Monday was pretty quiet, but it set the scene for some really good trades on Tuesday. Went short the Dow, FTSE and the DAX on Tuesday. All of these are profitable, the Dow particularly so. Went short around here, so it's a 300-point move. Fairly quick, really quick as well. Now on the Dow, we have a ABC pattern, A, B, 1, 2, 3, 4, 5, with a solid buying spike last night. Right now, I treat this as a positive. I think it's likely we're going to see the market go up again from here. We'll look at the FTSE and the DAX in a minute, so they have a slightly different story to tell. But on the Dow at the moment, this looks fairly positive. I'll just go up a leg. This is the hourly chart. Right, there are various different counts here, but you look at the actual this leg here, starting from this point there. 1, 2, 3, A, B, C. We just looked at that. 4, fifth wave. So right now, that's my preferred count on the Dow. More upside seems likely. And on the FTSE, same kind of scenario. Went short around here, I think. So a good move, caught that well. Took profits around here, half profits, raised my stop. I think I've still got a short position, a small one, probably close it on Monday. I have introduced a WhatsApp trading room. This is a very convenient way of relaying information to subscribers. I think it's really enhanced the service, in fact. And of course, I think we're very close to a bear market here. We should see some very sharp moves coming in, maybe later this year. These can change things quite dramatically. The volatility increases quite a lot when you have a bear market. This means that systems that work well in bull market conditions, where things are a bit quieter, can break down in bear market conditions. So it's quite important to be aware of where you are in the cycle. There's one thing we'll be discussing in the A-B Crouch Gap conference on 31st of May. We've got Bill Adlodd coming in to give us his views on the coming peaks, which seem pretty. I mean, I think it's pretty clear that there's going to be a pretty massive peak. I was right in 87. I was right in around the turn of the millennium, and I actually wrote Financial Catechism Now in 2006, just ahead of the peaks in 2007. I think, as far as I can see, it's pretty clear we're going to see something quite major happening quite soon in these markets. A wave pattern here. We've got ABC here. That's a corrective form. B wave. C wave, 1, 2, 3. Actually, there's no fifth wave there because we didn't see new lows here. We've got an A, B, C here, but so far this looks pretty corrective. So again, quite a nice buying spike there. So on FTSE, although there are more impulsive aspects of this decline, we haven't seen a fifth wave, so it could be that we're going to go higher here also. The only caveat to that is that this move is pretty corrective at the moment, ABC. So perhaps this is a B wave, might see a C wave. Even then, we're going to see higher prices next week, I think. So I guess the only caveat is that Trump has failed to get the Obamacare Act repealed. Could be quite a big dent in his presidency. The first major bill he's tried to get through, he's failed to get through. The promises he made in the election. So far, it's a fairly major problem if you can't get all the stuff he promised through. So I guess that could upset markets come Monday. But to carry on that point about the Trump's problems, I think right now we're at the end of a bull market. All the risk is to the downside right now. There's not much upside potential. So from an investment standpoint, that's quite important. Personally, as you know, I'm heavily into gold and silver, and most of my cash is well, not most of it, but a substantial part of my cash is in gold and silver stocks. I still have some shares in other markets, equity markets, but I would not be too keen on having too much in these markets right now because they look very toppy, and I say the risk is to the downside. Right, let's have a look at the DAX. DAX actually is pretty clear. A, B, C, corrective, up we go. So I think we're going higher on the DAX. Looking at the daily chart, it still looks pretty corrective. A, B, C. This rather strange expanding triangle type B wave, and now 1, 2, 3, 4, and this rather messy fifth wave that is yet to finish. We are, of course, as I said before, very close to previous all-time highs, so that's quite likely around 12.4. We now got that point where the magnetic influence is liable to attract or drag the market higher to make new highs before this is over. Right, gold. We now have 5 waves up, so 1, 2, 1, 2, 3, 4, 5, a third wave, ABC fourth wave, and now this fifth wave, which looks like it's peaked there. A, B, now a C wave coming in. As long as this remains contained, with support around here really, so move down to around 12.28, 12.24 would be to be expected. The entire move was around 56 points, so 50% is 28, which actually is bang on 1124. So that's a major support for this move. But if equities do go higher, then I think gold is quite to come back and test that level, and that could be a great buying opportunity, because once this bear market that I'm expecting starts to begin in earnest, I think gold will start to do extremely well, and it could be closer than anybody thinks. Although I think it could be any time given the overall situation. Anyway, I'll hold it at that point. I hope you found that interesting and useful. Back to the report on Tuesday morning subscribers. I would suggest this is a good time to sign up to my service. You do get a special offer for the first month. The WhatsApp room I think you find extremely useful. So I've got a very good record of calling bear markets. And it's looking imminent to me. So on that note, thank you very much for listening. Have a great weekend, and bye for now.